What's happening in the mortgage world? Well, watching that 10-year treasury. That's one of the things that we do all the time is watch the 10-year treasury because that is the leading indicator for what's going to happen in the mortgage world. Now, mortgages are only driven by mortgage-backed securities. And OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgages. Thank you for the compliance issues. 5.584 is what the loans locked for yesterday. 5.584, down just a slight bit. But you remember, I've been telling you right along, 3.409 is where we were January 3rd, 3.409. So about almost 2.25 points higher right now on the interest rate side. Does that mean you should not get a new home loan? Of course not.
No.
That's driven by what your situation in life is. Do you need a bigger house? Do you need to add a pool, do some remodeling? Are you getting married, getting divorced? Maybe dealing with probate? People buy houses based on life events. That's why we buy a house. Now, the flip side, rate and term refinance, probably not going to be an issue right now. But what if you have a lot of debt? And I've told you this before, get rid of the debt now. I've got a blended rate calculator. You put in the rate of all of your debts, including the amount, so it's a weighted average, and find out what your blended household interest rate is. If you've got equity, now is the time to take care of that because we will be going into a recession within the next 12 months. Here's the latest statistic. Whenever you see a negative GDP, which we had last quarter, down 1.4%, 75% of the time it's followed by a second negative GDP quarter. What does two GDP quarters, negative GDP quarters mean? That's one of the definitions of a recession. So we may already be in the recession. We don't find that out for about 3 months after the second quarter that we're in there. We may already be there. But what happens to real estate values during a recession? They go up. What happens to interest rates during a recession? They go down. So if you take your cash out refinance right now, cash out refinances always have an extra charge to them because it's cash out. So it's going to be an extra eighth or quarter higher than market rate. Why do I say do it now? Well, because then you're ready for the next, when we get to the lower prices, which you're going to keep longer term, you've already tapped out of that. So you wait 6 months. Once the rates start coming down, it might be 6, 12, 18 months. When the rates come down, that's when you restructure a second time and get a long-term lower rate. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.